Hello, everybody. Welcome to my new weekly review. So let's start. I took only two trades last week, CHFJPY and GBPNZD. These were two winning trades after the losing month. I have back again two winning trades. So the first one, CHFJPY, was a taken one. This was bullish M with a natural M on the daily with a limit on the 4 hour. So I will open the daily chart, the weekly and the 4 hour then. So I'll delete this. So on the daily, if I go over it, what did we saw on the daily? So you can see we had a first leg, second leg, third leg here. These are all the same highs here. Fourth leg coming back, we have here the bullish M in play on the FIP levels. And then we are stuck between these highs here and these lows. So we are in a range, but for me, there were still some clear impulses and corrections. If I still look on the impulses and corrections, because a lot of people will say, yeah, we are in a range here, and yeah, we can be stuck in here and we can go to the downside also or upside, we don't know. But what I saw was the impulses were still there in the correction. So we had here our impulse, this is still our correction. Impulse, clear correction. Impulse, clear correction with the FIB completion aligning with that new action here, because we made a new action from this daily low week here. The previous daily low week was here, and we just went below that here. So this is a new action. We find some new liquidity, and we had a nice daily candle closing back to the daily highs, where we can now start to reject from because we are still in a range. So this is why I took it, because it was still looking good when I looked at daily impulses and corrections. So if I go over the weekly, I will go over the weekly now. What can you see on the weekly? The weekly was also very clear for me because the trend was still bullish. For me, this was our previous low. High, we made a break of that, but this could be still a false break because the trend wasn't switched fully yet. And this monthly low, higher low, was sitting here where the buyers kicked in from, and we went impulsively to the upside. So this was telling me this break of this previous higher low is just a false break and the trend is still going to the upside. So that's why the trend was still for me bullish. And we made here a nice close above these highs. We acted as a supply and demand zone here, and we made the kind of natural M. So we made here the same highs. We expect the same lows aligning with this IC. So, and aligning also with the supply and demand, so acting as resistance, support potentially. So this is a clear supply and demand zone for me with that pattern on the weekly. This gave me a 3 out of 4, so the trend was for me. So the market structure was also bullish, correction, so impulse, correction, impulse, potential correction, which we did here. And we reversed from that supply and demand, so weekly natural M lows. Then the candle close. This one was the last one. This was clearly bullish. So this one was really closing nicely. So this is already 2 out of 4. The FIP. You could say you can draw your FIP from this low till this high, but yeah, I don't do that always with natural M's. I just did here the FIP completion from this low till this high, and you had here a FIP completion, so that's why it was against me. But still, it was still clear to go because you had also here that supply and demand zone working for you. So a 3 out of 4. And then on that 4 hour, what did we see? We can see clearly that the 4 hour was still bullish because we made here a low, a high, low. These were the same highs here. So this was the new high here then. So everything between this low and high is just bullish. And you can also see the corrections clearly. You have here impulse, correction, impulse. This is one clear correction. We broke out of it here. Being of correction was tapped, bam, and then back again here that correction, and here your impulse. So, and then we tapped the daily zone. So we were looking for a pattern. And what we received was a deceleration. First candle, second candle, third candle. After the third candle was closed, we could set our limit. We did that. Stop loss below the deceleration wicks, the lowest wicks, around 10 to 15 pips, and then we could go to the upside. And we took here all the partials out because normally I take 2.5% out, and it was also aligning with this selling zone on these daily highs. So that's why I took there some profits out. So nice trade. This was a good trade. So then the other one we could take after that I didn't take was Euro NZD. This was a daily bearish W with a FIB completion on the 4 hour. So I will open my daily chart, weekly chart, and 4 hour chart. So why didn't I take this trade? If we look on the daily perspective, you can see you had here a clear bearish W. You had your first leg, second leg, third leg, fourth leg. You can see clearly this is a clear impulse with one candle, and then you have one, two, three, four bullish candles. So this is clearly corrective. So it's clear to take this kind of trades. Our daily zone of interest is at our first point of structure here, aligning here with the 78.60. So we had our daily zone of interest. So it was a good trade. But then why I didn't take it was because I had here, I think back then was a 1 out of 4, but when I did Saturday in the morning a call with Bjorn and other TFD members, we saw that we have a clear impulse and correction, and the market structure is potential bearish. So what I mean with that is if we look just at the trend is still bullish, yet here low, high, low, new high. So we have here our bigger bullish M. But then if you look closer, why I say this is if you look closer, you have here your impulse, potential correction here. But then if you look more close, impulse, impulse correction, impulse, potential correction, it takes longer. It takes really longer to tap again these highs. You can see 1, 2, 3 weeks, 1, 2, 3, 4, 5, 6, 7, 8 when we went to the downside. So this was a clear correction. Then again, after that, we had an impulse. This can be again your correction. And what can you see? It can be aligning with this selling zone, acting as resistance, resistance, support, support, resistance. And you can see this candle was rejecting from it with a doji, as we call that. And that's why I say the market structure is bearish because you had a clear impulse. These are the same lows. This can be your correction. And then you can receive after this supply and demand zone again an impulse. Even if that weekly is still bullish, we can see the impulses and corrections are still respected. So yeah. So then the candle close was just normal. Then the FIB from this high to this low was tapped. 61.80 was aligning here or a little bit lower. So then this is for us. And the supply and demand, so this one is also for us. So we had a 3 out of 4 that we could take. And yeah, I was reviewing it as a 1 out of 4 because the trend was still bullish. So this was no go. Then the candle close was this, and the FIB from low to high was also against us. So only the supply and demand on here was working for us. So this was only a 1 out of 4 for me. But yeah, after having the call with Bjorn, it was more clear for me that this also could be a 3 out of 4, and we could take it. So then on the 4 hour, so if I go back to the daily, you could potentially take this bearish W with a 4 hour FIB completion. If I go to the 4 hour, you can see that you could have a FIB completion. If you take your Fibonacci from this low till this high, you have a -27 FIB completion aligning here. But then I noted that we didn't touch that FIB completion. And why is that? Because this IC here is sitting in the way. So this IC here is sitting in a way that can potentially go and trigger some bears, which it did on that IC. We didn't tap this FIB completion, so we went to the downside. and we could take here some profits at this daily lows, and then we went back up. So this is the reason why this trade was not going for that FIP completion. So this was a nice trade you could take. I explained why I didn't take it. So then the third one, GBPNZD, we could take was a trade I took. I took 1.67% out because I had two trades running on my 200K account because I was minus 8, 9%, something like that, and I didn't want to risk a lot. So I opened one more trade on my 100K account with 0.5, 0.5%. So I had in total 1% running and 0.5% of my 200K account. So this is why I took one trade out of it here, and one trade was going break even. So I will go over it, the daily, weekly, and the 4 hour, like this. Yes. So the daily, what could we see on the daily? So we had the potential. What I first saw was a bearish W. So you have your first leg, correction, second leg. So first leg, second leg, third leg, impulse, correction, fourth leg, going back up. And what we saw with that is here a potential shoulder one also had shoulder two. So a pattern within a pattern. This is a small pattern, so we could take our limit on the shoulder one, and then the pairs could take some liquidity for more downside momentum. So if I go now to the weekly, because we had a 3 out of 4, what did we saw on the weekly? We saw a clear impulse, correction, here also impulse, but then this impulse was also more impulsive. But I saw the weekly is bearish. We have here our bearish W, we formed this one, so there is a lot of liquidity sitting at these weekly highs, even if that weekly is coming more faster or impulsiver than this third leg. So this is no problem because the liquidity is at these weekly highs, and there are some sellers, as you can see. So if you see sellers, then we are above it, some kind of support. Then here again, sellers, potential sellers again, which we were holding here that previous week. So if you look, the trend is for me short, bearish. We have this bearish W. Then the candle close was, yeah, you could say it could be against you, but I saw it came a little bit more back. So actually, I saw it neutral for me. It was not really convincing me that it was too bullish or too bearish. So I took just the neutral way. Then the flip from this high to this low is for you. And then the supply and demand zone here at this selling zone here is working for you. So we have a 3 out of 4 that we have for that short. So if I go to the 4 hour now, you could see, or if I go back to the daily, you could see we had a pattern within a pattern. We wanted to take our limit at this daily shoulder one. And if I go to the 4 hour, you could see that here was also some nice resistance, false break, resistance, resistance, resistance. I see here sitting. Very nice to see. And here you had your impulse and here the clear correction. And we just placed the limit because it was a small pattern within a pattern. We took it here and we went to the downside, took here one trade out, and the other trade I was still running because I wanted to see the beginning of correction tapped, and we also didn't tap the daily low. So actually there was still some room for more downside momentum because we were really correctively going to the upside. That's why I was running that other 0.5% till this beginning of correction, but unfortunately this trade yeah wasn't going back to the downside, so it went to the upside, and potentially we can yeah do a scaling trade on that one again. So we will see, but this was a good trade. I closed one of them, so yeah, that's why I had the 1.67%. Yes. So then the fourth trade, AUD NZD, this trade is still running if I took it, because why I didn't took it, so I didn't took it is I was here really in doubt because that weekly was talking out I was talking out of it because the weekly was not that clear for me. Uh, but if we review it afterwards, we can see that the weekly um, is clear. So if I go to the daily, yet still your daily pattern within a pattern. For me, it's a really big pattern. Yet your shoulder one had potential shoulder two, which wasn't holding here at this zone. So where is the price then going to? This is this bullish M, first leg, second leg, third leg. And we came back till these daily lows. We grabbed some liquidity, went to the upside. And after that, what did we receive? Same highs. We expect same lows. We grabbed liquidity. We went a little bit close. We closed a little bit lower. And then we went back up as a false break of these daily lows. So why could we take also here a trade? Because I didn't take this trade because of the weekly. And I will go over it. So on the weekly, most of the people will say this trend is still bearish, or some will say bullish, but you can see these are the highs and these are the potential lows because this is a false break. You can see false break, these are the lows. So we are stuck between these lows here and these highs here. And what did we see if we look closer? I can see if we don't have that clear trend, you could see potentially to the impulses and corrections. So what can we see here is a clear impulse. What can we receive after it is a correction, this one, with a fib completion from this high to this low. You have here your fib completion aligning, which we grabbed some liquidity from with again an impulse. So you can clearly see that we have that clear impulse, and this is your whole correction. And then if we look closer, we had here an impulse correction. So this is why we went back to the downside impulsively. Then we had, after that impulse, an impulse again. So we are potentially shifting from momentum to the upside because we had that fib completion here. And then you can see a really massive correction on that weekly. And then we can see we are stuck on this buying zone here. Buyers are kicking in every time we tap this buying zone here. So, and aligning also with this trend line here, first touch, second touch, third touch. Potentially we could go to the upside, but the supply and demand zone here was holding us down. You can see the sales are kicking in, but you could also see these are corrective weekly sellers. And then we received again this buyers impulse. Then here the supply and demand zone was again triggered. And then we had that impulse, took no liquidity from this buying zone, and we can potentially go to the upside. So the price is stuck actually now between this highs here. This is a really nice supply and demand zone, and these lows where the buyers are kicking in from. And then if you take the decision from that impulse correction, you could potentially say, yeah, we can have again an impulse. If you also see this impulse and this correction, so we are having two impulses, corrections within each other, which is powerful. And that's why I was in doubt of this trade because the trend was still bearish, and then this was a no-go, and then the FIP was a no-go. So actually, the supply demand zone was actually a yes here in this case. So yes, actually it's a 3 out of 4 here because the supply demand zone here was triggered. But so yeah, this was the reason I didn't took it. So then on the 4 hour, what could we see? We could see the price was coming to our daily zone of interest, and we had a discount diesel, one candle, second candle, third candle, and then here we received a diesel. For me, it's no problem if that candle closes a little bit below that. For me, it's still the same diesel box. You could take it. I backtested this kind of diesels, and we went to the upside and it's now still running. You could go on break even right now, and potentially it goes till these highs and you can take 2.5% out. So this trade is clear. Then the last one, get GPY. Um, so why I didn't take this? So I will go over the daily, weekly, and 4 hour. So this could be also 2.5% trade. If I go over the daily, why I didn't take this trade? Because I was looking at it. We had a bigger bullish M. So we had here our first leg, second leg, third leg, fourth leg, or the smaller one, first leg, correction, second leg, third leg, correction, fourth leg, tapping this daily previous structure, which was resistance, which could become support, which it did till this selling zone. So why I wasn't take why I didn't take this trade is because I wanted to see a tap of these daily highs for a natural M, and we didn't do that. But then I saw this could be a potential false break of these highs here. And then you can see we respected these highs, which was here a false break. And actually you can see then this as your pattern reset, again tapping this daily zone of interest. And then you could look for a 4 hour pattern, which I didn't know. Now I know that and I can adjust on it. So this is the reason actually I didn't take it. If I go on the 4 hour, you can see which pattern you could take. Shoulder one here had we had a tap of these highs, and we can take here that position after we close and tap these highs. You could be in a trade here, and you could go running for 2.5% here and taking out yeah there the trade. So yeah, this could be a nice trade if you were in it. Didn't went over the weekly. So the weekly for me was a 4 out of 4. And why is that? Because the trend is still bullish. Yet here your impulse, first leg, second leg, third leg, bullish M going back to the weekly lows, grabbing liquidity back to the upside to the weekly highs. We are closing above this weekly highs. As you can see, if I drew my line, you can see we're closing above a support here, which is really nice, acting as a supply and demand zone. And I saw here more to the downside why this week went till this lows, till this IC or this supply and demand zone is because we had here our really big selling zone, which was here acting as support, false break, support IC, resistance with a nice IC here sitting, which came back till here, closed back below. We went up, closed above that, and we went and acted as support. So it's clear supply and demand zone. So this was for me the clear supply and demand zone, this one where we grabbed some liquidity from, which we did also here again with the new action of that previous weekly low week here. So the trend is bullish. The trend is bullish. Candle close, this one, this red candle, which came all the way back up, is for me bullish. Fib from this low till this high is bullish. Supply and demand zone, this one here is bullish. So 4 out of 4, we could take this trade. So yeah, I went over the daily. It was clear why I didn't take it because we didn't have the daily highs. And on the 4 hour, you could see you could take this 4 hour inverted and shoulders. So actually, this week could be a 10% week. Um, yeah, and I went, I guess, around 4.2%. I took out of it, which is not bad, but it could be better. It can always be better, and yeah, that's the thing. We can always improve for some more results, some more gains. So yeah, I hope you liked it, my weekly review, and see you next week. Bye, everybody.